Eric Muathe, Muathe.com. Let's take a look at the chart for DB. What I want to discuss in this video, and the intention for the video, is to show you how you can have different types of traders looking at the same stock and ending up with different conclusions. So, for example, I'm just going to show you one individual that I respect that at the moment seems to be suggesting that DB or Deutsche Bank is poised to go higher. This is the first trading day for February 2017. Market's been open for a couple of hours today. So I just noticed that he was saying that this is what the chart looks like and it's a buy. In fact, let me enlarge this chart here. Please understand, nothing personal. I'm just discussing how traders, we all look at the charts and come to our own conclusions, and everybody has their own view. I'm just going to share with you mine based on the things we discuss on my channel. And here what you see is he's talking about this big wedge, and I can see why that could be a reason to begin a movement to the upside. So based on the fact that if I take his chart here, he's saying that this huge wedge going back to 2005 could be the reason why Deutsche Bank is now poised to explode to the upside. So let me share with you the other chart, and I hope he's right. So I mean, all of us can make money in the market. Again, nothing personal, it's somebody I respect. And here we can see that he's making the comment that, full disclosure, his premium members are long the stock, and here's a second chart that he's attached, and it is showing that from his perspective the stock is breaking out on the daily. Now, I don't know how, but he came to that line there, but let's just assume that this is what the line looks like and that this was an entry. So anyway, let me share with you my view. My view is precisely the opposite, and what this goes to show us is that even when we have good ideas, when I have good ideas, when you have good ideas, it's always a good idea to place a stop, because if one person using their experience says the stock is a buy and another person using their experience says the stock is a sell, somebody is wrong. And so rather than insisting that you are correct all the time, the best thing to do is figure out where you can place a stop just in case you are wrong. So I'm going to share with you why I think that at the present time Deutsche Bank, in my opinion, is a sell. Yes, it's opening the month of February up about 3.5, almost 4% for the day, but let me share with you my views. So first and foremost, we can see the stock has had a nice run, but so has most of the market over the last couple of weeks since about November. Market's been trading well. There was a breakout here, looks good. I can see why people are playing this, because yes, it's breaking out short term, right? It's breaking out. What's not to like? Now, if you take a look at the weekly also, I can see why people like this right now, or some people do. Nice crossover between the 13-week moving average and the 34-week moving average. So yes, there's some things going on in the chart here that look good. We can also see that short term it's moving above the recent weekly closing high. It's doing its best to follow through this week. Looks great. Now let's take a look at the long-term monthly chart, and this is going back and taking a look at the 3 years. Whoops. So this is 3 years monthly chart. All right, first thing I see here is that the stock does not meet the minimum requirement. We need the stock to be trading at 3-year highs. If it is truly about to explode, we can see one of the MACDs is close enough to 3-year highs. I'll give this one a pass. RSI is giving us a huge question. It would need to be at 3-year highs. Check the description of the video. There's a link I'm going to include with this video discussing why this is the minimum requirement. Right now the RSI does not meet the minimum requirement that it should be at 3-year highs for a quality breakout. So I see a little bit of a question mark in terms of the quality of any breakout as of right now. In fact, just bear with me here. What I'm gonna do is I'm gonna adjust this slightly. So I'm using right now 36 months of data. I'm gonna change this to 34 months because I see that it could actually help with the bullish argument. So 34 months. Why 34? Because it's part of the Fibonacci number series. Of course, you start with 0, 1, 1, 2, 3, 5, 8, 13, 21, 21, 34, 55, 89, 144, 233, right? And then there's 677, and then there's 8987. Yeah, I know those off head, but I'm using 34 because of this number right there. I like to use the Fibonacci numbers as best as I can, so I'm going to adjust this to 34 months, and you're going to see a little bit of a different view, which is now that actually there's good argument the stock meets the minimum requirement as per what we look for. It's getting very close to 3-year highs, which is what you want to see, and one of the MACDs is at 3-year high. So definitely I take that back with what I said previously, that it doesn't meet the minimum requirement. I'll give it a pass in terms of why it meets the minimum requirement. Having said that, let me go and share with you why now I think this is where it could easily be running into problems. So let's take a look at all data monthly for the Deutsche Bank, and here we have, I think, my reasoning as to why it's gonna stall, or could very easily stall. There was a major break here in 2014 off the highs here, and since then we can take this line here and draw a horizontal line, and this is what I call the uniformity method. Again, I'll have a link in the description of this video. So this concept I call the uniformity. This blue line here is the uniformity line. So let me take that off again. So draw it again one more time. What we are doing here is essentially using the stock itself to try and help us gauge any turn points. And we can see that it broke down, the stock responded negatively. We take that information, draw a line, which is the uniformity line. You can see that we've come to this level previously. We went above it and back below it. In other words, we were rejected with uniform RSI action here for the highs here at 35. And as we begin the month of February 2017, it's coming back to test that line. So I suspect that even though it is up for the month, should it turn negative for the month, or if it turns negative around here on this monthly chart, that would suggest that the next meaningful swing trade potentially is lower. That's why personally I would take the other side of this trade. It's just my own personal view, and that's why we should always use stops, because you'll find two people with experience reading charts and they'll have their own different views. So that means, even at best, you could be wrong in your analysis. I could be wrong, and that's fine. Here, if you take the most recent highs on the monthly RSI going back to 07, you can see that this is coming back to test that top side of that RSI line. That's another layer of resistance. Now, if I bring back the previous line that I drew, so this line here, from this break point, of course this has been a problem since 2014. If we can clear and trade above this line, then that would be great for bulls. Otherwise, resistance here would be a problem. So bulls definitely want to see the stock clear resistance and trade above the blue line, which would indicate that there's potential for substantial increase in price. Otherwise, failure to do that and confirmation of resistance on this blue line would be a major short-term sell signal. Now, if we test that line and go backwards in time, even to that right there, we can see it corresponds with another major break here. That break also was a trend break. As you can see, that trend break was responsible for bringing the market off the highs here in the 90s, 80s, before it dropped all the way to the mid-teens. Big drop. So if I can share that line once again, is this break line, the stock is telling us, was important, because once it slashed through this period here, we had a substantial drop. Now we take that information, and that line is coming in play even in the current market. That's why I'm saying, if we take those two lines, and also now let's add the previous line, the RSI topside resistance line. If the stock is unable to move above those two lines, that's why I'm saying, if it is unable to, chances are the next major direction is actually lower. And my own personal feeling is that this move here early in the month is a trap. Reason why I say that is, if I go to the hourly chart, I can see that this was the recent break, short term, off the highs here. We had a shallow pullback. Now we are coming back to test the break line right there, and I think we can already see that the stock is showing signs of stalling. So that's why I think even at current levels, this could be a trap. Take a look at the 30-minute chart, and again we can see that the recent break took place here. Now that break brought it off recent hourly highs, which is this period here. We've seen a shallow drop. Now the RSI that is being tested since the break here, and I think the more we stall around current levels, even hour to hour, the more the stock is telling me that probably taking the other side of the trade based on the monthly chart is a better option. But we shall see. What am I trying to say here is, this is why we have to make sure we have stops, because depending on what you're looking at, depending on your position, your analysis, your conclusions, you could think that you have the best idea in the world, but yet somebody else could have the opposite reaction or the opposite conclusion to their analysis, that it is the best sell signal. So because we don't know which way markets are going to go sometimes, in fact, if ever, we don't know, we never know where the markets are going to go, ever. It's always a question mark, right? The reason why we should use stops is because even at best, you could be wrong. There could be something you're missing on your charts, and I think that those who are going long this name are underestimating the monthly chart coming in play. So again, I think those who are going long this name are underestimating the importance of the monthly chart, and also this break line here. I think those who are underestimating the importance of these two lines ultimately might discover why this one might actually stall. Again, it always makes sense, in my opinion, that most traders don't account for the monthly charts, but the monthly charts, if you go against them, can be a really bit of a problem, and could be the reason why some trades that should work on other time frames fail, because of failure to account for monthly chart variations and monthly chart resistance levels, support levels, and things of that nature. Otherwise, just make sure you have stops. My own personal view here is, others are going long. I think this is the direction to take. We shall see. It's not a fight to see who's wrong or right. Moral of the story here is, this is why one needs to use stops, just in case they are wrong. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. I am out.